Thank you for joining us today. In light of all the events that have dominated the headlines in recent weeks, we felt that it was a good idea to reach out and share our perspectives on handling volatility in today's markets. As you are surely aware, the first weeks of 2016 have been rocky for equities. Following another round of bad data out of China and another move to devaluate China's currency, markets folded under selling pressure. Add this to the renewed concerns about slowing economic growth around the world and challenging headwinds in the form of rising interest rates, a strong dollar, and falling commodity prices, and you have a near-perfect recipe for a stock market correction. A correction is defined as a 10% drop from recent highs. This is exactly what we've experienced in the recent weeks. When markets swing, it's natural to worry about your investments and question your commitment to your strategy. As a financial professional, we wanted to pass along some tips for handling volatile markets, and not letting brief periods of negativity derail your strategy. Number one, turn off the noise. Turn off the television, throw away the business section of your newspaper, and stay off the financial websites. Hanging on every word of what the talking heads say will only add to your stress and encourage emotional decision making. Media headlines are designed to pull in eyeballs, and that's why nearly everything you read makes it look like the sky is falling. One of the major reasons why you work with a team of trusted professionals is so that you can delegate the worry to us. We'll keep you informed and update you when you need to make changes. Number two, stay focused on your personal big picture. Ask yourself, am I living comfortably right now? Am I making progress toward my goals? Has anything changed outside of what's going on in the markets? How long is my investment time horizon? If you're invested for 10, 20, 30 years or more, volatility the last few days, weeks, or even months is a blip on the radar. Though we can't use the past to predict the future, the S&P 500 has delivered average annualized performance of 11.41% since 1928. Keep in mind that during those years included the Great Depression, during which stocks lost 83%, the bear market of '87 when stocks lost 33.5%, and 2008 financial crisis when the S&P 500 dropped 57% before regaining 202% over the next 6 years. We don't make drastic changes to portfolios just because markets swing. We take a look at the fundamentals, do our due diligence, and then make prudent investment decisions where we feel they're necessary. Number three, focus on what's in your control. Can you control what the markets are doing? If you can, I'd like to hire you. Because if you can't, what I can do is work with you to help you understand your personal goals and create an investment strategy that's designed to help you pursue them. I can do all the research, do all the analysis, bulletproof the strategies as best as I can, and then I have to work with what the markets give me. That doesn't mean that I sit back, throw my hands up, and say, all right, game over. Now what? What I do is monitor the markets, follow the experts, and do a ton of analysis to find opportunities to help my clients thrive when markets are volatile. What you can do is stick with your strategy we created together. Keep living your life, socking away money for the future, and focusing on what matters to you. I always want you to see these corrections as an opportunity for a gut check. If you're really worried about your portfolio, it might be time to do another risk assessment. If you're feeling pretty calm and you're doing very well, you want to be able to sleep at night as well. Number four, don't give in to emotion. Volatility makes for stressful investing, and it can be tempting to bail when stocks fall and try to ride out the bad times on the sidelines. Unfortunately, trying to time when to exit or enter the markets is very difficult and not likely to work out in your favor. Research shows that investors are terrible at predicting market tops and bottoms. That means they usually buy high and sell low, which is the exact opposite of what you want to do. Corrections happen regularly, and periods of high growth often occur close to major pullbacks. If you're not in the market when it rallies, you may miss out on the best days in performance. Number five, stay flexible. Thriving during volatility doesn't mean sitting on your hands. One of the benefits of an active, flexible investment style is that we can make strategy shifts to take advantage of new opportunities that arise. As professionals, we're always looking for prudent opportunities to help our clients pursue their goals in changing market environments. We may talk to you about making some changes to your strategy to try to take advantage of what's going on in the markets. Where do we stand at Brookstone Financial? Investor sentiment is negative right now because people are uncertain about a combination of factors from slowing growth in China, tumbling oil prices, and concerns about how that will all affect corporate profits. However, the domestic growth picture is still looking modestly good. We have a strong labor market, consumer sentiment is high, and we're hoping for some strong consumer spending numbers. That's not to say it's all roses. Markets are facing a lot of challenges. However, it's not another 2008 again. In conclusion, I'd like to say this. Successful investing is a long-term project. Though pullbacks and sustained periods of volatility are stressful, they are normal and natural part of market cycles. As financial professionals, our job is to look at what's going on underneath. Your job is to stay calm and focus on your goals, knowing that there is a serious professional who is taking care of the details for you. We don't think that now is the time to make drastic action. We will reach out to you personally if we believe that changes to your investment strategy need to be made in light of our analysis. If you have experienced any life changes or shifts in your goals that warrant changes to your portfolio, please let us know as soon as possible. As always, we are here to provide you with clarity, perspective, and support during challenging times like these. Thank you for your confidence you have placed in our abilities. We consider it an honor and a privilege to be good stewards of the assets you have entrusted in our care. If you have friends or family members who you think would benefit from the information we just shared, please let us know and we will be happy to send them this recording. If you are joining us for the first time and you would like some information about how we may be able to help you with your investment strategy, feel free to call our office at 812-288-9000 or visit us on the web at brookstonefinancial.com. Lastly, we would like to mention that the information from today's call and video is also available as a special letter. If you or someone you know would like to receive a copy, please let me know. On behalf of everyone here at Brookstone Financial, it was a pleasure speaking with you today, and as always, it's a pleasure serving you in the future. We look forward to speaking with you soon.